NVIDIA stocks just blew up from $20 to a staggering $237.87 per share overnight. This is how. Over the past 2 decades, NVIDIA has become one of the most recognizable names in the tech industry thanks to its powerful graphics processing units, or GPUs, and artificial intelligence, or AI, technologies. This was not always the story. In the early days, NVIDIA was just a small startup founded by 3 friends in 1993 who set out to create a better graphics processing unit. Their hard work paid off, and by the late 1990s, NVIDIA had become a leading player in the computer graphics industry. In 1999, NVIDIA went public, raising $26 million in its initial public offering, or IPO. During that year, NVIDIA's stock went through a roller coaster ride of ups and downs. In the first half of the year, the stock price was hovering around $20 per share. But something happened late June that year. The company announced a major partnership with Microsoft, which would include NVIDIA's graphics technology in the upcoming Windows 2000 operating system. This news sent the stock soaring, reaching a high of $47 per share by early July. The euphoria was short-lived, as the stock price quickly retreated in the following months. The market was becoming increasingly volatile, with concerns about the Y2K bug and the dot-com bubble bursting. More so, some investors were skeptical of NVIDIA's long-term prospects, as the company was heavily dependent on the gaming industry and faced stiff competition from other chip makers. By the end of the year, NVIDIA's stock had settled back down to around $20 per share, roughly where it started. NVIDIA needed to come out with a game-changing strategy. To innovate was the deal breaker. By 2007, NVIDIA's stock had reached an all-time high of $38.60 per share, thanks to the popularity of its GPUs in the gaming industry. GeForce 8800 graphics card, which was highly loved by most gaming enthusiasts. The card's advanced features and high performance made it a top choice for serious gamers. Additionally, in 2007, NVIDIA had secured several major partnerships with other technology companies, including Intel and Dell. These partnerships helped to increase the company's visibility and credibility in the industry. Trading at $30 per share at the beginning of the year and reaching a high of over $50 per share represented a significant increase in value for investors. NVIDIA's sales and revenue exponentially grew. However, this will take a nosedive yet another time. The financial crisis of 2008 hit NVIDIA hard, and its stock price plummeted to just $7.50 per share. NVIDIA kept the focus on innovation and diversification. That was the winning strategy. The company began to expand into new markets, including mobile devices and autonomous vehicles. Its GPUs also became essential for the booming AI industry. In 2016, NVIDIA was a top-performing tech stock, experiencing a significant rise in its stock price. In February, the company's share price was around $30, and by December, it had surged to nearly $120, marking an increase of around 400%. One of the main reasons for the significant surge in NVIDIA's stock price was due to the company's dominant position in the gaming industry. Does NVIDIA ever get out of the woods? In 2020, the company's stock saw significant growth and volatility due to a number of factors. At the beginning of 2020, NVIDIA's stock price was around $237 per share. The company's stock initially saw a decline in February and March as the COVID-19 pandemic began to take hold and investors became increasingly concerned about the global economic impact. However, as the year progressed, NVIDIA's stock began to bounce back. NVIDIA's stock growth in 2020 due to the increased demand for gaming and remote work technologies. As people were forced to stay home due to the pandemic, there was a surge in demand for gaming hardware and equipment, as well as for technologies that enabled remote work and online learning. NVIDIA's GPUs are widely used in gaming and AI applications, with a growing business in data centers, which became increasingly important as more people worked from home. In 2020, an investment that will see NVIDIA's stock grow astronomically was the acquisition of Mellanox Technologies. Mellanox is a leading provider of high-speed networking solutions, and the acquisition helped NVIDIA to expand its reach in the data center market and further strengthen its position in the AI and high-performance computing markets. The circumstances of 2020 doubled the share value over the course of the year. As of December 31st, 2020, NVIDIA's stock price was around $525 per share, representing a year-over-year increase of around 120%. Excellent, but that not even was the best of NVIDIA's stocks yet. NVIDIA shares rose more than 12% on Thursday, February 23rd, 2023, a day after the chipmaker reported a top and bottom line beat. Analysts are also bullish on the company's AI vision. NVIDIA reported $6.05 billion in revenue and adjusted earnings per share of 88 cents, beating the Wall Street consensus. It expects sales of $6.5 billion in the coming quarter. Analysts responded positively both to NVIDIA's results and to growth in its data center business, with a slew of reiterated or upgraded ratings coming after the report. That vertical is home to most of NVIDIA's sales of GPUs for artificial intelligence and grew 11% year over year. More than a dozen analysts raised their price targets or maintained a positive rating on the stock. AI adoption has reached a tipping point. OpenAI's ChatGPT has sparked global interest by allowing people to experience AI firsthand and demonstrating what's possible with generative AI. CEO Jensen Huang said on a conference call with analysts on Wednesday. Huang referred to the transformation as an iPhone moment earlier this year during a fireside chat at the University of California, Berkeley. NVIDIA's AI play is accelerating in a way that will have disruptive implications for both its competitors and the world at large, Rosenblatt Securities' Hans Mosesmann said a day before shares rose by 12%. NVIDIA's report, released on the same day Intel cut its dividend by 2/3, highlights a multi-generational shift we have never witnessed, according to Mosesmann, who reiterated a buy rating and set a $320 price target. Credit Suisse's Chris Casso was similarly upbeat, calling NVIDIA a difficult not-to-own stock and maintaining it as a top pick in the sector. Casso wrote that his assessment was influenced by a combination of de-risked gaming estimates, coupled with what we believe to be the strongest growth potential in semis from AI and data center. Casso raised NVIDIA's target price from $210 to $275. Goldman Sachs analyst Toshiya Hari upgraded NVIDIA to a buy rating and set a $275 price target in a surprise move. In retrospect, Hari wrote in a Thursday morning note, "We recognize that our decision to remain on the sidelines in anticipation of a pullback in the company's fundamentals was incorrect." Hari cited NVIDIA's disciplined expense management and accelerating AI adoption. Overall, NVIDIA's history has been one of ups and downs, but the company's ability to adapt and innovate has made it one of the most successful tech companies in the world. If you want to know the most advanced GPU in the world right now, click on this video right here. Thanks for watching.